Okay, guys. Hi, a few text traders, and hello to the investment community that listens in to us every week. I'm going to be going through my weekly trading roadmap for the week starting the 20th of July 2015. And this week is going to be notably a lot more quiet, I would think, than the last 3 weeks. At least this Monday, I'm expecting to be probably the quietest Monday we've had for the last 3 to 4 weeks. Just due to the die down and all the headline risks we've been having from Greece and such. It seems as if that whole situation's kind of come to some sort of a conclusion. That Greece is, well, as it seems now, going to be getting a bailout, or at least they're going to be starting negotiations towards a bailout. But with everything seemingly going on track, we've got um, we've got ourselves back to summer market liquidity, back to summer market trading, which is relatively long, a lot more quiet than we usually see in other parts of the year. So, if that's one thing I want to make clear, if for those of you that are trading these markets, especially if you're trading them intraday, you want to be keeping uh, your bullets really close to yourself, your chips really close to yourself, and not giving too much away and cherry picking your trades a little bit more than usual, just because uh, the opportunities are going to be a little bit more few and far between. Okay, so if we just kick this off, um, there isn't any weekend news per se. And before I go into some of the event and risks that we're seeing this week, which by and large are just almost non-existent to some of the other weeks altogether, I think what I'm going to do is first take a look at the two markets that I trade, take a look at the technicals, and then we'll have a gander at some of these event and risks for the week. So the first chart I want to pull up is the Eurostoxx 50 chart. If I just bring this all into the frame here, I want to show you this chart on a monthly, and this chart goes all the way back to 1999. If I'm not mistaken, around here, this is 1999. This is the highs that we made at 55.25 in 2000, just before we had dot-com bubble collapse. So we had that move down. Then we made the second highest peak of the market was made just before 2008 in 2007 at 46.08. And now the recent highs that we've made are currently at 37.69, which seemingly we are probably going to be attacking quite soon, if not this week or the week after. I'm assuming in the next month or so. Just the way this is structured, this is looking fairly bullish. Now, we've looked at this chart before. We've seen the structure of this market before on a monthly. And I wanted to just take a look at it again and put this into context before we take a look a little bit more at the nitty gritty of it. So putting this into perspective, obviously we did note that we were trading, last time we looked at it, we were trading in this region here. We were saying how the very key area for us to hold above um, was basically this support and resistance zone at 34.74. You can see going back many years, 2005 here, 2008 in here. There was some good little swings in this area. So as long as we stayed above here, this market's context was going to be, firmly bullish. Now, notably, if you're watching the price ladder, you're watching the price action on the way down through that area. Um, we have been saying how the selling was very much forced, and that there was a lot of passive buying, just literally absorbing all of the selling into these areas. So very forced move down into these areas. But ultimately, the massive support for us was this value area zone, this big technical support here. Around these 32.82s, we did flag this up 2 weeks ago, saying how this was a really key area. This was basically the area in which QE was announced, and we've effectively bounced off that level and made that our low of this month so far. Now, if you take a look at the structure and just open it up a bit, you can see, and in fact, if we just put that onto a smaller time frame for you guys to take a look at, we'll actually put it on the daily for you. You can see that we've now broken this flag formation that we've been talking about. We've been talking about this flag for quite some time. It's been building for quite some time. We just nipped the bottom of it there, came up. We've left a number of gaps in between here, broken it, and now we're just literally chilling above that flag formation. Now, I think I've heard a lot of the traders even on the floor, they were saying how, this market's pretty much rallied a very big lump, a good 4 points, 400 ticks to the upside in uh, about just over 2 weeks, or just less than 2 weeks, sorry. We've pretty much done this whole maneuver. So it's been fairly aggressive, fairly quick rally to the upside, and we've left a lot of gaps and bits that we haven't really traded out to the downside. So effectively, some of the traders were saying on the floor is the fact that we've just traded this so quickly, and that we should at least have some move to the downside. Now, I don't necessarily think that's the case. I would, once we take a look at the market profile, there's some scenarios and some trade setups that I'll be looking at to see if we can actually maybe come and fill some of these areas in. But it's not something I'm saying it's a number one scenario. I do think in the given scenarios, if all the news continues to be relatively bullish for the risk assets regarding Greece and other parts of the world, naming namely China as well, then I wouldn't be surprised if we left these gaps in the market and continued trading higher quite aggressively. So long as we're holding above this flag formation for me, above this trend line, I think the next area that we're going to be attacking is that recent swing high at 37.69. Now, again, it wouldn't surprise me if we came and filled this in a little bit. We have this recent gap, a bit more of a technical gap than the rest of this. This is all fundamental gaps. So this technical gap, I would say, is a little more prone to being filled in these fundamental gaps. But so if we would fill this in, I'd still think that we could find some decent support around this trend line area. So just keep that in mind if when you're trading this. Obviously, we do have an inside day, and the inside day boundaries are 36.60 to the downside and 36.94 to the upside. So watch out for that. Obviously, any breaks of that, we could see just a little bit of some quick liquidations on either side. I would imagine that the break to the downside could be slightly better than the break to the upside, just because if anyone's bought that quite aggressively and needs to liquidate quickly, maybe we might get just a quick flush. I'm not saying that the break to the upside is going to be bad, but in my personal opinion, I think maybe the break to the downside might be a little bit more swift. So if we take a quick look at the market profile structure, and I think there's some interesting things to note. And the first obvious thing to note is that a lot of the value has been built in the upper end of this weekly profile. So you can see here we've got a very big cave from literally the VPOC of last week at 36.75 going all the way down until these areas here where we've got a bit more volume and TPO value area around 35.87, which is quite a bit lower. It's a really big cave for me. I mean, we do have some, small distributions here of value, but not very much going on in there. So I think there's an interesting scenario in which if the market can't hold a bid and build some structure just above here, so if the market can actually start building TPO structure above this bell-shaped curve to the upside here, and does actually start offering below this 36.75 and holds below that area, I think there is a good argument to say that so long as we're below that and start building some structure below here, there's going to be, I think, a higher probability of this market starting to trade lower and fill in some of this very low volume, very low TPO count area. So this cave could be under threat of a fill if we do start holding below that area. I think that's a hypothesis that I'm going to have in my trading plan, and so long as we're below there, I'm probably going to be not an aggressive seller because this is a very bullish market, but I think a passive seller at the very least. So if we do start coming off, I'd be selling into any small rallies, and those small rallies, I'd like to see those rallies done on less volume than the pushes lower. So that's one key thing I'd be looking out for. Obviously, at the gap fill, I think there could be decent buy in this area around 36.33, a little gap fill. But ultimately, so long as we're in last week's value area and we're holding below that, I think there's an argument to say that we could come and test the other side of that value area at 35.91. In which case, if we do get down to these 35.91s, I think there's a good argument to say that the next little bit of support is obviously this high volume node here at 35.87, just below that value area low of the week. And that would kind of make sense with the whole filling in of this massive cave, testing the other side of that value area, and potentially holding a bit of a bid there. Obviously, if we get below there, there are some nice little levels. We've got the high of this week here at 35.80, if I'm not mistaken with reading these numbers in here. But I think ultimately the really key area that I would feel very, I'd say, excited to buy would be around these 35.31s to 35.27s. We've got the highs of this week around, well, basically the selling tail of this week, the buying tail of this week, the high of this week. We didn't see much price action around this point here, but still it's the initial balance of this day, or at least the first print of this day in here, and that single print fill just at 35.27. So I think this area here could be really, really crucial, and an area I'd be really interested in taking part as a buyer. I'm not going to go any further to the downside, but we do have that value area high of that week at 34.98, which is just short of the buying tail, and low, which comes in at 34.92. So if, however, we do start building structure above this, and we break the high of last week, which is also the value area high of last week at 36.96, well then, for all intents and purposes, this market could potentially start just grinding its way higher, testing the first initial resistance at 37.11, which I have written down for some reason. If we go back, yes, we do have a bit of a selling tail initial balance just in there, and then ultimately reaching, well, at least what's on market delta as the high, the recent highs, just from an adjusted perspective at 37.27. But we do know the contract highs were 37.69. So just bear that in mind. Those are the next few levels that we should be keeping in mind if we do start making our way to the upside. But like I said, I do think there's an interesting scenario in which this holds below the VPOC and tests lower. So taking a look over at the Bund on a daily structure real quick, just to put this into a bit of perspective. We've seen this market obviously sell off quite aggressively since April, May. Basically in April we started off an aggressive sell-off. May we saw a lot of extensive volatility, had a bit of a bid, and then in June we had another big bout of selling. Now ever since then, throughout June and July we've had this lackluster, I'd say, bid just to the upside in this trend channel. So in this is the trend channel resistance and trend channel support. We just managed to break that, I'd say 2 weeks ago, when we first, well, we basically had, we had this move lower. Then this, on this day, was basically the announcement. That was actually last week, where we actually had the news that they were basically coming to a deal. We had that spike down, that capitulation move to the downside, closed relatively strong, I'd say pretty strong on that day, and then we've just subsequently started building a bit of a base to the upside, filled in that gap, and now we're slowly trickling our way back to the upside. Now it's interesting how when we did come back and test that on the 60-minute chart, this actually comes in pretty much to the tick around here where we tested that low in there. To the tick comes into that trend channel support. So now we're just slowly making our way to the upside. Now if we take a look at the structure, we could say that we've got a left shoulder in here, a head built in here, and then a right shoulder built in here with the neckline coming in just around these 150 for the figure area. So from a trend channel perspective, we're holding back inside, so you'd say this technically should be testing the other side of the trend channel, which comes in a lot higher, and you know, if even if we did it all in one day, we'd probably be testing that main resistance area here at 155.13s. But I'm assuming we won't do that that quickly, so we could be looking a little bit higher. So if we're to stay within this trend channel, we're probably breaking this neckline as well. Um, but obviously there are a few key areas that we have to keep in mind. We didn't quite get to these 154.33s. That was the major area that I wanted to sell when we were getting there. We didn't quite get there. In fact, the highs were at 24s, so we were about 10 ticks short or 9 ticks short of that area. But in any case, as it stands, we're slowly making a bit of a case to find a bid to the upside, and this is kind of the structure that we're currently holding on the dailies. If we take a quick look at the market profile, and we just take a look at last week, obviously this is the structure of last week with a very, very big profile. Um, Very, very strong close on the week overall. But mind you, I think if we do start coming off a little bit, it could be some interesting areas to take part on the buy side. You don't necessarily need to get too aggressive to the upside. I think if we come off, it could be some interesting areas. Now, the first area, obviously, if we're holding initially, the close of last week is above the value area, so there's a case that we might open outside of the value area of the week. If we do poke back below these 152.70s, you know, do expect maybe we get, nice swift moves back down. But having said that, I am keeping in mind that even though we did break above the value area last week, of the previous week at 152.43s, and on market delta actually that comes in at 152.35s, and both those levels were being paid attention to, so I'm going to keep them in mind. I think there's a bit of unfinished business in auctioning this whole week off. So I think even if we do hold below this weekly value area high and then come and test within this area, I think there's still a case to be made that we might hold a decent bid in this area. And if we're holding a bid in this area at 52.35s or 52.43s, which as an area I've been liking for quite a while now, I think there's a case that we break back above, and once we do, and if we do take this out after holding that as a bid, I think the reaction here is going to be pretty quick and swift. And I think, there's really nothing much holding this back. We've got this high of the week at 152.91s. Above that, there's nothing really holding this back to trading the VPOC of that week at 153.35s. And then really, I don't see much of a case of it stopping anywhere really until the value area high of that week at 153.97, with the highs of that week at 154.24. So that's a pretty interesting little setup, pretty interesting little scenario or hypothesis that I'm going to be looking at. Obviously, if we don't hold there, your case is that we could come back into the value area of the previous week and just sort of auction off. There are a few areas, obviously, that value area of this week at 152.10, I'm not too keen on it. Wasn't really paying attention too much to it, but I will keep it in the back of my head. I will be looking, however, at these 151.90s, which is now a 2 weekly value area, sorry, 2 weekly VPOC. So we have 1 weekly VPOC here, and then last week's VPOC is also 151.90s. And we've also seen it paid attention to this area before. So we've gone through it, held it resistance, and then sold off. So this could be a nice little decision point, again, similar to these up here. I wouldn't really paying too much attention to these 152.10s, but these 151.90s, something that I think could be an interesting area to take part in. Below that, we're really looking all the way down to these 151.30s to 151.24s. The 24s being a value area low of this week, around the value area highs of this week, around the value area lows of that week, and the value area low of that week. So this whole area from 151.24 all the way up to 151.30 for me is just pretty much massive. And if we are holding in last week's value area and we do make our way down here, this is an area, a massive, like for me, is a massive decision point. And I don't think, in my opinion, if we get here, after the recent swing in last week, the buyers are going to let this go very easily. So if you're an intraday trader, I think this could be a very interesting place to take part as a buyer for at least a move back into this little zone in here. So I think, there's some really decent risk reward if your risk is literally just 6 or 7 ticks below these 24s, in the mid-teens of here, your reward can easily be back inside here. Now it depends on the time of day. If we get here after cash hours, I wouldn't be as keen, but if we get here, in the middle of the U.S. session, the middle of the EU session, I think I'm quite happy to take part in that area. So that's currently the structure of the Bund and the Euro stocks. Let's take a quick look over the calendar and we'll see where the main adventure and risks of the week are, and if there's anything interesting for us to trade. Monday, nothing much, that's really exciting me. I've just jotted these down just to put something down. Really, I'm not really looking at German PPIs, but they are coming out at 7 a.m. tomorrow morning. Keeping an eye on them. Also, the German Ministry of Finance releasing their June monthly report. Again, not something I'm crazy about, but again, just keeping an eye out to see if there's anything at all that we can trade off of, some sort of indications of inflation, growth, anything that might move the market just a little bit, but not something I'm used to trading, so I'm not going to go into too much depth of that, obviously. Tuesday, not much on the data point front. We do have the BOJ minutes, so keep an eye out on those if you're trading the yen, and then we also have the RBA minutes on Tuesday as well. So if you're trading these are very early in the morning, so you're going to have to be in the office. If you're trading London hours, you're going to have to be trading at, well, literally whatever time you usually wake up, you should already be in the office trading. So those are going to be, I'd say, relatively interesting. The BOJ obviously being um, interesting from the point of view of the yen. Obviously, the yen's just broken out of and held above a pretty key area, which we've been taking a look at for quite some time now. And if I can quickly just show you guys what that looks like, bring that up on my Reuters, just to show you what that structure is currently looking like. So that's the current structure of the yen on a daily chart. We've just, you know, made a small move down into this key flag zone in here. We've been holding above. The really key area for me now is 124.43s. If we can get above these 124.43s, we could quite easily be attacking these 125.87s. To put this chart into perspective on a monthly basis, you'll see going back many, many, many years, back to the 90s and 80s even, there's a really key trend line here that we've just literally broken, and now we're holding above. I've been, kind of looking at this for a very long time now, and we're actually starting to trade in these areas. So after last week's the last 2 weeks pretty bullish closes, any sort of easing bias out of the minutes, I think this could start trucking its way. There's nothing really stopping this once it takes this high out to be trading in these, 130s. So pretty interesting chart, interesting to take a look at, and obviously, if you're ready, there could be some good opportunities there. Wednesday, we're looking at the U.S. existing home sales and the U.S. DOE crude oil inventories as per usual. We've got the RBA Stephen speaking, and then we have the BOE minutes. Now, the BOE, as we've been noting recently, has been becoming, I'd say, markedly um, quite hawkish on the whole. So overall, we've seen the BOE's Carney just relatively hawkish, talking about rate rises into the sharper relief during the end of the year. We've seen the BOE's Miles, which is a very strong dove, probably the biggest dove on their board. He's talking about the risks of not raising rates and the fact that we should be raising rates soon. So it's interesting because if we do, obviously we've had this recent rhetoric, maybe the market's starting to digest it a bit. But if we get out of the minutes, maybe a pretty strong indication of that, maybe a big surprise like a 6-3 vote, or even just a 7-2 would be quite um, surprising, I guess. But even something even more hawkish than that, 6-3, or even a 5-4, something just out of the blue. We could expect some pretty aggressive pricing in the gilts, in the short stirs, in your pound. The pound, the cable's probably going to rally, ridiculously hard. We've seen a very strong week last week in the pound versus the other currencies. The euro was underperforming versus the pound massively, and the pound just really strong, even though The dollar has been quite strong last week. The cable was holding up significantly well. So, bear this in mind now. It seems like everyone's talking about the Fed, but the BOE slowly starting to show its hand, and that it might actually hike before the Fed. So keep an eye on this because this could be an interesting um, little event to trade. Come Thursday, we've got the UK retail sales, so quite an important figure again. Plays in with the whole substance of rate hikes out of the BOE. So keep an eye on that figure. Friday, we've got the Chinese HSBC Chinese manufacturing PMIs. That's a preliminary number, so take a look at that number because we've had a lot of volatility out of China, and I think these PMIs are relatively important. If we get um, just a lot lower figures than we're expecting, maybe we get just some sort of excessive volatility in the markets. Um, Last week we actually had, a beat in the GDP, so it's probably calmed down a bit of the market jitters. But again, I think China's slowly going to be getting more and more focus as we go along because, there's been a massive credit bubble in that market for many, many years now, especially the property market. So if we do get signs of the massive overheating and we do get signs of a bubble popping, if China sneezes, I think the world's going to feel that a lot more than if Greece does sneeze. So just bear that in mind because, we've had all this focus around Greece, but China really didn't get, much of the headlines. So just keep it in the back of your head, build a plan around it just in case things do develop. We do have the European services and manufacturing PMIs. So with that, we get the Spanish, the French, the German. So keep an eye on these because they're preliminary numbers and they'll move the market a lot more than any of the other numbers. And then we've got the U.S. new home sales just before the expiry of the Bund bubble and Schatz. So taking a look at my risk and money management plan, um, I haven't actually updated this from last week. It seems, or I did, but it seems like it hasn't updated. I didn't. Seems it hasn't saved on Evernote. So what I'm going to do is, I think what I will say, instead of taking this into account, from what I remember, I've put very little risk on Monday. So again, I'd say probably around 10%, um, or maybe even less than that on Monday. And I think the rest of the week, apart from really Wednesday, so I'd probably shift that 30% up to Wednesday and keep the rest at 20%. So I'd probably say Tuesday, Thursday, and Friday, 20% risk allocation, and then Wednesday I'd put in a 30%. So I'll just change that for you guys now to make that clear. And obviously these numbers all change. It's not 13 adventure risks on Wednesday. It is actually only 4. But you get the point. In any case, the main adventure risk for me is going to be these BOE minutes because that'll affect some of the markets that I'm trading. Um, and in all other days, Monday, I think tomorrow, I think if you're trading on Mondays, keep it, keep it tight. Friday, the volume was really, really non-existent. And if that's any indication of how the summer markets are going to be now that there's no news risks, um, it's really important for you guys to keep your risk and keep your money, at bay, and protect yourself because it's not a time to be going headfirst into the market. If you've had a good couple of months, you want to keep some of that and wait until the market starts opening up, and that usually takes place around September. September is when we start seeing a bit more volume come into the market. But now, if there's anything, I'd say put yourself a small target on the day each day. Once you've reached it, pull back, stop trading, and find something else to do. That's probably the best advice I can give you. Well, that's me for this week. Thank you for listening in. I'll be doing on Tuesday. I'll be doing a price ladder analysis. I'm still figuring out what that's going to be on, but tune in on 12 o'clock on Tuesday for that. And then on Friday, I'll do my weekly market wrap. So hopefully I'll see you guys then. Take care, have a good trading week, and good luck. Bye-bye.